Welcome back to Tesla Daily News Podcast. Today is March 29th, 2026. In the next few minutes, we're breaking down the Tesla headlines that matter for Tesla: charging expansion in China, a new energy market move in the UK, demand snapshots from Israel, and why valuation sensitivity is still all about autonomy and robotics. Story 1. Tesla just added a big chunk of charging capacity in one of China's key mega regions. Context: in EVs, infrastructure can be a demand lever and a competitive moat, especially in China, where consumers expect fast charging to be ubiquitous. Details: Tesla put 55 new V4 Supercharger stations into operation in Chongqing, totaling 212 charging piles, positioned across transport hubs and major expressways that connect into neighboring provinces like Sichuan, Hubei, Hunan, Shaanxi, and Guizhou. Tesla says the aim is supercharging availability roughly every hour of driving on those corridors. Tesla's broader China footprint is now more than 2,500 supercharger stations and over 12,000 charging piles across mainland China. Importantly, over 950 stations are accessible to non-Tesla vehicles, with additional destination charging sites expanding coverage. Impact: for investors, the near-term revenue impact is likely modest. Charging is not Tesla's biggest profit pool, but strategically it supports vehicle demand, improves the ownership experience, and reinforces brand stickiness. Opening more stations to non-Tesla drivers also positions Tesla to participate in charging utilization growth and potential software-like network effects, while helping regulators and consumers see Tesla as part of the national infrastructure build-out. Takeaway: in China, Tesla is playing offense on infrastructure. That supports deliveries and competitiveness, even in a market defined by intense local competition and rapid innovation. Story 2. Tesla's energy business is quietly expanding into a new category: electricity retail in the United Kingdom. Context: Tesla Energy has been scaling through products like Powerwall and grid-scale storage, but becoming a licensed electricity supplier can move Tesla closer to recurring revenue and grid services monetization. Details: Tesla Energy Ventures has reportedly obtained a power supply license in Great Britain, enabling it to sell electricity to customers. The coverage notes this arrives in an environment of elevated energy price sensitivity. Impact: if Tesla executes well, this can strengthen the case that Tesla is more than an automaker, potentially improving investor perception around revenue diversification and higher quality, repeatable cash flows. That said, retail electricity is competitive, regulated, and operationally complex. Margins can be thin unless Tesla pairs supply with storage, demand response, and smart software that optimizes when customers consume or export power. Takeaway: watch for follow-up details. Target customer segments, whether Tesla bundles supply with Powerwall or vehicle charging plans, and how quickly it scales beyond a pilot footprint. Story 3. A real-time demand snapshot: Tesla deliveries surged in Israel this month as EV share rebounded. Context: macro shocks, like energy price spikes, can change consumer behavior fast. EV adoption isn't just about climate. Sometimes it's about the economics of the next fill-up. Details: reporting from Israel says EV share jumped to about 18% of deliveries since the beginning of the month, up from about 10% in the first 2 months of the year, helped by a large shipment of Tesla vehicles being delivered. So far this month, about 1,085 Teslas were delivered. The Model Y led monthly registrations with roughly 812 units registered so far and about 273 Model 3s delivered, primarily the lower-priced rear-wheel drive variant priced around 192,000 shekels. Impact: for Tesla investors, this is a reminder that quarterly delivery outcomes can swing on logistics and shipment timing in smaller markets. It's not a full demand read-through globally, but it does show that when inventory lands and consumers are facing higher fuel expectations, Tesla can capture share quickly. Takeaway: the key investor question is repeatability. Is this a one-time shipment effect, or does it reflect sustained demand strength as energy prices stay volatile? Story 4. Of a local but meaningful brick-and-mortar expansion, Tesla signed a large lease for a new showroom and service center in South Florida. Context: service and delivery capacity matters. Tesla's delivery experience, maintenance throughput, and repair times directly influence customer satisfaction and, ultimately, demand. Details: Tesla reportedly leased a roughly 45,255 square foot facility in Kendall, Florida, taking over a former Toys R Us building. The location is expected to open in late 2026. Impact: this is not a near-term earnings catalyst, but it signals continued investment in physical footprint where Tesla has strong adoption. Better service capacity can reduce friction, especially important as Tesla's installed base grows and as more buyers compare Tesla's total ownership experience against legacy automakers. Takeaway: Incremental, unglamorous capacity builds like service centers often matter more to long-run brand health than a single marketing push. Story 5. Market framing. Tesla's valuation remains the most sensitive among megacaps, and the debate keeps circling back to robot access and humanoid robots. Context. When a stock trades at a premium multiple, the market is implicitly paying for future optionality. With Tesla, that optionality is autonomy, AI, and robotics. Details. In a broader piece on market valuation, Tesla was highlighted as having an extremely high forward price-to-earnings multiple, listed around 184, compared with other large-cap peers. The commentary suggests that whether that premium is justified depends on your expectations for Tesla's robotaxi service and a future line of humanoid robots. Impact. For Tesla, this is the key. In risk-off tape, high multiple stocks can compress quickly without a clear catalyst. In risk-on-tape, Tesla can re-rate upward if investors see credible progress toward autonomy monetization. Takeaway. If you're trading or investing Tesla, separate the auto business, deliveries, pricing, margins from the call option, businesses, full self-driving commercialization, robotaxi economics, and Optimus scale. Story 6. Leadership and execution risk on the AI side. xAI appears to be in heavy churn as Musk rebuilds it ahead of a SpaceX IPO. Context. Tesla's long-term narrative is intertwined with AI talent and infrastructure. Even if xAI is not Tesla, investor sentiment often treats Musk's companies as a connected ecosystem. Details. Multiple reports say Ross Nardin, described as the last remaining original xAI co-founder, has left. That follows other co-founder departures, with several leaving since January. Musk has publicly said xAI was not built right initially and is being rebuilt. Reports also tie the shakeup to a SpaceX xAI corporate reorganization and IPO preparations. Impact. This can cut two ways. Bulls may argue it's a reset to improve execution. Bears may view it as instability and a distraction. For Tesla specifically, the investor relevance is indirect. Any perception that Musk's AI efforts are fragmented or talent is rotating out can pressure the autonomy narrative. Takeaway. Watch for concrete milestones, model performance, product adoption, and compute infrastructure, because headlines about departures tend to matter most when they delay shipping. Before we wrap, one quick competitive note. BYD reported its 2025 net profit fell 19% year-over-year to about 32.6 billion yuan, while revenue rose modestly. Even as profits dip, BYD's scale and overseas push underscore that China's EV market remains a brutal pricing environment, which is the backdrop for Tesla's ongoing China strategy. That's it for today. The big themes. Tesla is doubling down on charging infrastructure in China, stepping deeper into energy as a service in the UK, and we're seeing how logistics plus fuel price expectations can swing demand in smaller markets like Israel. For the stock, valuation remains the headline, so the market will keep demanding proof points on autonomy and robotics. For tomorrow, keep an eye out for any end-of-quarter delivery chatter, regional registration data, and updates on energy market moves. Those can shift sentiment quickly. If you value daily, investor-focused Tesla coverage, subscribe to Tesla Daily News Podcast and follow us for the next episode.